Hey everyone, this is Dave Welch here. It's a beautiful morning here in Yorktown, and I just wanted to film outside, even though it's 44 degrees in the sun. It feels very nice. So, as you can see around me, it's the George Watch or Yorktown National Forest right behind me. This is my backyard, and so I want to talk about today the market volatility and the Cathie Wood video. Or yeah, so she had a video that came out Friday evening, and she talked about all this market volatility as a buying opportunity. And I'm going to include the link to that video down below. And so right now I want to talk about the email that she sent out, which is right here. Okay, here we have our weekly email from Cathie Wood from March 5th. And this is any stock that has appreciated or dropped more than 50% in a day during the course of the week. So to begin with, we have X1, ticker XONE, closed up more than 24% on Monday. X1, a leader in binder jetting 3D printing technology, may have been responding to Stratasys' fourth quarter report, in which both revenues and earnings topped expectations. Pacific Biosciences, it was up 15%. It is a leading provider of highly accurate long-read sequencing solutions, surged 15% on Monday as investors and speculators bid it up in advance of the Advances in Genome Biology and Technology, AGBT, conference this week. During AGBT, spokespeople from Pacific Biosciences and Children's Mercy Hospital unveiled preliminary data suggesting that PacBio's hi-fi long-read whole genome sequencing, WGS, significantly outperforms short-read sequencing the diagnosis of rare and Mendelian diseases. In a prospective setting, hi-fi WGS generated a 67% diagnostic yield compared to 45% for short-read sequencing. Based on organic adoption of long-read sequencing, a sizable $900 million investment from SoftBank and transformational technology partnership with Invente, NVTA, we believe PacBio is well positioned to dominate the WGS market in both clinical and population research settings. Next one, Silvergate, ticker SI, traded up 16% on Monday in line with rising cryptocurrency prices, then traded down 17% on Thursday during a broad-based equity market correction. In our view, the Silvergate Exchange Network, SCN, with its strong network effects, positions it as both a facilitator and prime beneficiary of increased crypto adoption. So yeah, the crypto space is not my specialty, and I don't invest in cryptocurrencies at this point because I believe there's going to be a shakedown, and we'll see whatever bubbles up to the top, and I will then decide which one to invest in. So, but right now I'm staying on the sidelines. So next stock is Vuzix, ticker VUZI, a company developing wearable display technology, traded up 25% on Monday in response to a press release announcing that Microsoft Teams will support its M400 and M4000 smart glasses. On Thursday, the stock dropped 22% in a broad-based equity market correction. Now, okay, so I used Microsoft Teams at work, where I work, and it is not user-friendly at all. However, like Zoom, I think Zoom is way more user-friendly than Microsoft Teams. So Microsoft really needs to look into their product on Microsoft Teams and figure out how to make that more user-friendly, because it is not at all user-friendly. So that's just my personal opinion. So the next stock is Stratasys, ticker SSYS, closed down nearly 17% on Wednesday after pricing a 6.9 million share secondary at $29. Stratasys is a leader in polymer 3D printing. Okay, next stock, Schrödinger, ticker SDGR, a computational drug and material discovery company leveraging its highly differentiated physics-based platform, dropped 27% on Thursday after reporting quarterly and full-year results that disappointed investor expectations. In his 2021 guidance, Schrödinger highlighted that growth in its core software is slowing down as the size of its customer contracts increases, extending sales cycles and limiting near-term revenue visibility. Additionally, Schrödinger's internal drug development pipeline progress has slowed down slightly, pushing IND submissions into early 2022 instead of late 2021. Despite these concerns, we believe Schrödinger's medicinal chemistry platform offers a powerful and unique view into chemical space, which should become more apparent as its internal and collaborative programs enter clinical stages. Okay, and the final one, Veracyte, ticker VCYT, a vertically integrated provider of molecular diagnostic and prognostic testing, closed down 15% on Thursday in a broad equity market sell-off. We believe investors are concerned about the stability of tissue-based biopsies in the face of delays associated with the COVID-19 pandemic. In our view, Veracyte is extremely well positioned in the molecular diagnostic space, especially after its recent acquisition of Decipher Biosciences, which will move it into a market-leading position in 7 of the 10 most lethal cancers in the United States. Okay, well, there you go. One company that it seems like Cathie Wood has a high conviction of, and if they're going to be in the market-leading position, that really heightens my attention because, of my sister who died from a genetic disorder. So, this has definitely got my attention. So, okay, thanks. Okay, now I'd like to talk about the market activity, and I'll show you what I did in my E-Trade account, and that video is right here. Okay, here I have my positions. Arkg is down quite a bit. I'm down overall. And let's look at the chart. Let's see, the last 5 days, I want to compare this to the S&P 500. And it underperformed the S&P 500. But see this dip on Friday? That is a buying opportunity. Unfortunately, I'm out of cash. I would have had to sell another position such as Qclean or my S&P total market ETF in order to pick this up. I still keep this S&P TM, which is it's called the S&P total market. So Spider Portfolio S&P 1500. That is kind of like my deep value ETF that I keep as cash. And now that I think about it, maybe I should have sold some of it off. Give it a sec. It should show the S&P in comparison. Oh, yeah. So the gray line is right in comparison. So the gray line is the S&P 500. The candlesticks is the SPTM. And you can see that it's hard to see here, but as I zoom in, you can see the gray line is tracking this exactly. So this ETF tracks the S&P 500. Okay, let's look at Qclean, which is the First Trust NASDAQ Clean Edge Green Energy Index Fund chart. It also underperformed the S&P 500, and you can see over here in portfolio that the number one holding is Tesla. But then if you scroll down a little bit, and there's some other energy players, but the number 5 stock is Albemarle Corporation, which is a mining and energy stock. So, let's go back out, and I want to go to my Roth IRA, which has, oops, that's the wrong one. That's my other one that's managed by E-Trade. So Arkq, this one's managed by me. All these, everything I own here, I buy and sell. So Arkq is at the top of the list. It just took me back, and you can see number one is Tesla. Let's go back to overview. So this is the Arkk Innovation ETF chart. It underperforms, same as Arkg. And buying opportunity on Friday if you had some cash, or if you had a deep value stock that you would like, that you hold like cash, you could have picked up some trades. And I expect there's going to be more volatility. So as these stimulus checks come in, that people are going to be buying up these high conviction stocks like Tesla. When I say a high conviction, that's a high conviction I have in, and many other people on YouTube that I follow Arkk, the Arkk funds. They're waiting for these big dips to pick up more shares. So, and here's Arkq, and same thing, same exact thing as Arkk and Arkg. And let's go back into Arkq and look at the portfolio. So again, number one stock is Tesla, but you'll notice it's a little bit different. It's got more industrials in it, such as Deere, which is John Deere. And so let's see, this is John Deere. And then there's some defense contractors in here, like Kratos Defense and Security Solutions. I've talked about that in previous videos. And Baidu Inc. is not a defense contractor, but it's an electric vehicle company in China. American Deposit Receipts, that's what ADR means. So that means that you're buying it on the U.S. exchange, or excuse me, Arkq is buying this on a U.S. exchange. And it's just the Chinese stock is open on the exchange under ADR. Now let's look at these other, here's a momentum ETF called MTUM, which is the Ishares Msci USA Momentum Factor ETF. This one does pretty good. It tracks the S&P 500. Actually, it underperformed the S&P 500, but it invests in momentum plays. So let's look at what they're investing in. Tesla is the number one stock, followed by the big ones: Microsoft, Apple, Nvidia, Amazon, PayPal, Adobe, Thermo Fisher and Scientific, Alphabet, which is Google, and Class C, and then Alphabet, also Google, Class A. So let's go back to chart, underperformed, and which means that whenever the market does bounce back up, it's going to outperform the S&P 500. So here is healthcare equipment. I picked this up a couple of years ago, and it has done phenomenally well for me. This is just healthcare equipment. It's not like Arkg. So it's investing in companies that make equipment for healthcare. So, let's see. Arkq, Native, Star. Okay. Inari Medical, Ordinary Shares. So some of these I don't, like, what are these? So I just let them do their trading, and I do what I do. So that's all the positions I actively manage from my account. Now I will show you. Let's take a look at what TD Ameritrade manages. So ITOT is their most aggressive fund, and let's look at it: Apple, Microsoft, Amazon, Facebook. So it's got like 3,000 stocks it follows, and it slightly underperformed the S&P 500. And then Vanguard, FTSE. So this is developed markets. It outperformed. So developed markets would be like stocks in London, France, Japan, first world countries, Singapore. And then emerging markets, these are stocks that would be like in India, or well, maybe not India, but Indonesia. Actually, here's a Chinese stock at the top. Alibaba, Taiwan Semiconductor, JD. Okay, those are Chinese stocks. Chart. It underperformed the S&P 500. What else? That was emerging markets. And then it also invests in bonds. So bonds is kind of even keel. So let's see. This is iShares JP Morgan US dollar emerging markets bond ETF. Oh, that's emerging markets. So, and then here's the US bonds. It looks like it possibly out or kind of middle line. So one of the things that's happening is that the people are selling up, our fund managers are selling off stocks to buy up these equities. So you can see that the equities are kind of performing a little bit better, but not as, it's still going down over the past 5 days. And let's look at 3 months. So you can see in the candlesticks down below is the bonds, and the S&P 500 is the gray line, way outperforming bonds. So let's look at its portfolio. So yeah, federal national mortgages, it's investing in U.S. Treasuries and another fund, BlackRock cash funds. So that's it. All right, that's all I have to talk about this week. I've got other things going on, and so I just wanted to, include a quick update for you guys, and have a great weekend. And it's beautiful here in Yorktown, so whenever all this pandemic lifts, it's a great place to visit. The York National Forest, the York Battlegrounds, in Williamsburg, the historic Triangle, which includes James City County. So it's a gorgeous area to live in. So have a great weekend. All right, bye.